here's what we're thinking about for 2026 for the rest of the year. First, the economy. GDP is decelerating, but it's not contracting. Cooling labor market and stickier inflation are the two key tensions that we keep seeing. We're not forecasting a recession. We're watching closely, and if things deteriorate, we'll try to make adjustments as in timely manner. We do have the buffer ETF in place that's going to help to protect on the downside. The second are valuations. After one Q1 pullback, the large cap is still trading above its 20-year average. So even with a pullback, those stocks are not cheap. They're trading closer to their fair values, but they're still not cheap. Meanwhile, the value, mid-cap, small-cap stocks, the international, those are helping the portfolios. The downside protection, as I mentioned, is still there. Third, this is the most important point I'm going to make today, okay? The discipline over forecasting. We're going to keep getting geopolitical and policy shocks. Iran is the headline today, and something else will be the headline tomorrow. The April rebound, and you've probably seen the markets have recovered meaningfully since those lows. Those rebound is exactly why we don't try to time the markets around these shocks. If you looked at your statements, let's say on March 31st, and you panicked and you said, I'm going to pull my money out of the stock market and go to cash, by mid-April, you would have missed the very fast recovery. That's the asymmetry of timing. That's why getting the timing is so difficult. You have to be right twice. You have to be right when you sell, and you have to right when you want to get back in. So there's no good evidence that anyone can consistently do that. So what we do instead is we focus on things that we can control. How diversified you are, what you pay in cost, and whether you stay invested through quarters like this one. Those things over time, they kind of add up, they compound, okay? That's the overview of the Q1. We're sort of positioned, we're thinking about these items every day. The team is here to support you through that. So I want you to sort of leave you with this thought that quarters like this is why diversification exists. They're not fun to live through, but they're exactly the moments when a well-built portfolio earns its keep. So your portfolio is held up better than the headlines suggested, and that's by design. That's why we're here to make sure that happens.